2 weeks ago, the US tech sector somehow managed to be valued more than $9 trillion, making it more valuable than the entire European stock market. Then there were examples of companies like Tesla, which somehow managed to become the 7th largest company in the US after announcing a 5-to-1 stock split. Meanwhile, stay-at-home stocks like Overstock went parabolic mainly due to pure speculation and insane predictions by analysts. While all of this was happening, the world is literally on fire, and the pandemic is still causing a massive amount of global strife. And simply the contrast of an economy racked by uncertainty against a stock market chasing new all-time highs for the past 5 months, well, it's been striking for most people. Suffice to say, as we've seen the stock market endure a correction over the past 2 weeks, well, it's really hardly surprised anyone. And least surprising of all was the drastic fall by tech stocks. And, this weakness came on the back of overvaluation concerns and has prompted investors to cash in on the big gains they clocked. And so some news contributors think that this is a normal correction, while others believe that this might be the start of a more prolonged, long overdue sell-off in technology. Some go as far as to say that we're going to repeat the Dotcom bubble burst of 2000. And after all, we're less than 2 months away from the 20-year anniversary of Pets.com going out of business and sock puppet mascots going out of style. Now, here's the big question to ponder. What will happen now? Clearly, tech stocks are overvalued, and obviously the entire stock market is propped up on capital from the Fed. But of course, taking a bearish position for the last 5 months would have been essentially portfolio suicide. So let's try to understand where we are, where we're going, and what we should do to capitalize on the trends. Let's discuss some reasons why tech stocks became a bubble, some reasons why the stock market correction may be far from over, and some reasons why investing in tech is still the best move you can make right now. So I see 2 good reasons and 1 bad reason for the current tech bubble. The first good reason for the tech bubble is that the COVID economy benefits tech. And this is a pretty unscientific hypothesis, but in times of crisis like this, in times of uncertainty, well, people gravitate towards innovation, and tech companies certainly represent that. But more than good feelings, well, tech companies have also been bringing in more and more revenue as more and more of the economy shifts towards the digital. Companies that help facilitate stay-at-home business or consumerism have seen doubling or tripling of revenue in the past couple months. And yeah, even if that's insane, and even if we have no expectation that we'll continue to see doubling and tripling every quarter, well, it's still a very solid case that we'll continue to see more and more of these trends that have been adopted in the COVID economy continue on. The second good reason for the tech bubble is that rates are looking to stay low for a long period. Essentially, the Fed has given up on any real rate increase for the foreseeable future. I would expect Jerome Powell to keep the status quo as the Fed meets this week for the last time before the election. But even when the winds of change blow in a different direction, I think tech is still going to be in an advantageous position to respond to the changing times. And so the final reason for the tech bubble, and the bad one, is that there's been a flight to safety. There's been a clear flight to safety to tech stocks that don't quite have the same fundamentals as those blue chip, cornerstone industry giants that when the regular economy comes back, when we eventually move past COVID, well, I think they're going to be doing just fine. And I think we've seen a little indication of this with this recent pullback. So of course, all of this begs the question, are we about to see history repeat? Is this another dot-com bubble burst? Well, first off, let's understand what defines and distinguishes this tech bubble versus the bubble 20 years ago. Actually, what defines a bubble at all? I would define a bubble as something where assets have prices that simply can't be justified with any reasonable expectation. And so, of course, yeah, there are plenty of tech companies where the justification of their prices, of their assets, are certainly questionable. If you're familiar with startups, well, this might already sound familiar, but tech companies with huge valuations that sometimes don't make sense. So of course, this all does kind of sound like a repeat of the 2000s, but I think there's a big difference compared to what happened 20 years ago. Technology now really has a footprint in every industry. And I think this is a major crucial point that you need to understand. One of the clear differences versus 20 years ago is that technology has evolved to a point where it exists in multiple industries in multiple different forms. But there's no doubt that technology has shaped how we work and especially helped the world continue to move and function during uncertain times. I don't think that's going to stop. So, something I've talked about a lot on this channel is this idea of a new digital economy built by the tenets and technologies of the fourth industrial revolution. And without getting into the nitty-gritty of that, what you need to understand is that there is a 20-year plus technological renaissance that we're just at the beginning of. And that's going to be driven by rapid advancements in new technologies such as AI, IoT, blockchain, automation, battery storage, robotics, and many more that will come together and build on top of each other and propel us into new and exciting possibilities. And so this is the point I have to stress more than just about anything else in this video, is that what we're about to see, what I think is going to help us move beyond the next couple of years of recession and economic uncertainty and volatility, is the culmination of many technological breakthroughs that uplift each other concurrently, pushing each other forward with their advancements and breakthroughs and subsequent reductions to production costs. And so even in the face of a correction for tech stocks, even with uncertainty in the markets, I'm still all in on cloud, I'm all in on AI, I'm all in on SaaS, I'm all in on streaming, all in on clean energy, I'm all in on online commerce, all in on robotics. I'm all in technologies I think are going to be, the benefactors of a new economy moving forward once we get past all of what we're dealing with now. I believe in the law of accelerating returns, and it's not that other industries aren't going to continue to grow. But innovative companies will continue to outpace the rest, and as the pie grows over the coming decades, they will eat up more and more of it. And so I make the best of today by investing in tomorrow and looking to the promise and the progress that comes from overcoming adversity. So I want to hear your thoughts and what you think about the current conditions in the larger markets and where you find opportunities in them. I think this is a very transformative time, and I think this is a time to be looking for opportunities and how to get in front of them. And to that effect, we've launched an entirely new web portal dedicated to trading education and discussion, and filled with courses that you can take right now. Already you can sign up for Doc's most popular course about fractal energy trading, or check out our other new class that deals with the zero DTE strategy, which we've used to great effect this year to maintain an 80+% win rate on our trades. Later this week, we'll be launching 2 new courses on how to not get wrecked by trading options, and a class that deals exclusively with finding and making the most of opportunities with SPAC IPOs, one of the hottest new trends in the stock market, and something that I'm really excited to bring to you. Don't forget you can also get onto our free Discords. And if you haven't done so already, please like this video and subscribe if you find the content useful. I really appreciate your time and support of this channel. I want to continue to make great content for you that goes above and beyond what you're used to seeing out there. So, as always, I'll see you in the next one, and here's to your success. Cheers.